Hey, Mohamed, have we moved into some new territory, do you think? And I look at the S&P. I love it. We're at 4,080 now. So we tested the lows like you thought. We had our bet and everything else. We got below 3,600. But I don't know if we really would call that a breach of the lows. We came close. But a lot of people thought 3,200 eventually, or 3,000. People still do on the S&P. I'm wondering if you think, let's do the same exercise again. What's first now, 4,500 or 3,500, given that maybe we're starting to see some positive signs about the Fed and about whether they really need to go that much further. You think it's 35 or 45? We don't need to bet.
So first, I'm not going to get into another bet with you.
I know. I don't
want to bet with you again.
You got to meet Joe Namath. That means nothing to you?
It's never going to have this happen.
It means a lot. It meant a lot, and it was a lot of fun. Thank you, Joe. Look, we got to 3,500.
Go ahead.
We got to 3,500 because you had the coincidence of two things. You had interest rate risk and credit risk. In other words, you had concerns about the multiple because of what was happening to financial conditions and liquidity, and you had concerns about earnings. The first is going away. I am in the camp that inflation will continue to go down. I do think that by the middle of next year, we're going to be having a very serious discussion about what do you do when inflation is sticky at 3 to 4%. Do you drive the economy lower in order to get to 2% or not? But we will see inflation going down. So the marketplace is saying inflation risk is over. The market isn't focusing yet on credit and earnings risk. And that is because, as Steve rightly said, there's no sign of a recession.
So what then, 45 or 35? We don't have to bet.
Joe, I don't like you putting me in these sort of, barbell things, right? I think you've got to assess how things go along.
Are you feeling better that we maybe have made a bottom at this point, a permanent bottom? The Dow is up 20% now, Mohamed. So is that still a bear market rally, or do we call it a bull?
So I'll repeat what I've said over the last 3 or 4 times I've been on with you, which is for now, the coast is supportive of risk assets going higher. If you look beyond the next few days and weeks, there are some great uncertainties, and we are yet to get enough information one way or the other. So this market is a market that's very attractive to tactical players. It's much tougher for long-term investors.
Recession or not, Mohamed?
Look, I'm not in the camp of 100% recession. I think the risk is uncomfortably high, but we can avoid it. But, Steve, I always quickly add, if, however, we fall into recession, which I hope we don't fall into the transitory camp. Don't fall into the trap of saying, it will be short and shallow. Because if we do fall into a recession, there's a high risk that it will not be short and shallow. So keep an open mind, and let's not repeat the mistake of last year when we all embraced transitory inflation because we could look through it.
Is that because the Fed can't come in and the fiscal? Is that because the Fed and the fiscal side won't come in to help the economy at that point because of the inflation danger?
Yes, and also because balance sheets may be strong overall, but there's a good segment of the population that are hurting. Also, there's lots of stuff going on globally. Supply issues aren't going to disappear. I wrote an article in yesterday's Financial Times that goes through why we should be open-minded and humble about calling what a recession would look like, because there's simply too many uncertainties right now.